This is the Minnesota Real Estate Daily. I'm your host, Joe Metzler. Have you ever heard of QRM? Well, these three letters could make home buying very difficult in the near future and virtually destroy what is left of the housing market. You know, under a very misguided attempt to fix a housing mess, last year the Frank Dodd financial reform law said lenders will basically need to have skin in the game to prevent bad underwriting practices, and that they'll need to retain at least 5% of the mortgages on their own books, you know, unless the buyer's putting at least 20% down. Well, you know, that sounds good in theory, but look, lenders don't have this money, and this is sure to stifle the housing market even more, as it'll force many of the lenders, many of the players in the market to simply leave, you know, unless you have 20% down. Well, you know, the lenders remaining are sure to charge a premium for, you know, they're the only player in town. Hey, if you're the only player in town, charge what you want. Now, we also hear others in Washington are now asking to increase the FHA down payment to 5% over the 3.5% that it is now. Wrong, 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 wrong. I'll give you a great example. In another recent survey, the question was asked about down payment. Now, 12% of the respondents said they could come up with 20% to buy a house, no problem whatsoever. 12%. 17% said that they would have to borrow the down payment no matter what the size of the down payment. Didn't matter what it was, they'd have to borrow the money. 21% that they would need the smallest down payment loan option available, you know, like again, an FHA at 3%. And an amazing 50% said they would never be able to save enough for a down payment. Wow, those are really interesting numbers. Now, you really have to look at this. The mess wasn't created because of small down payments. No matter how good an application looks at the beginning of the loan, no matter how much money people put down, if you lose your job, you're going to have trouble making the mortgage payment typically within a few months, unless you got a ton of reserves. And the reality is not a lot of people have a ton of reserves. So, you know, you'd be better off taking, in my little loan officer humble opinion, you'd be better off taking the money that people put for down payment, put it in a bank in an escrow account and that they couldn't touch. And if in the future the homeowner had a short-term income problem, they could simply tap the payment from the escrow fund. Hey, I'm just thinking out loud as an alternative option. All right, so anyways, adding a big down payment requirement is only going to make the problem worse in an already distressed market and slow the housing and economic recovery. Again, my name is Joe Metzler. This is the Minnesota Real Estate Daily. Be aware of QRM, qualified residential mortgages. It's going to destroy the housing market. Contact your congressperson and tell them QRM is no good. Thanks for watching. We'll see you real soon.